Getting paid a dividend is great, but getting paid a dividend from the same company every single month just hits differently. I have a goal of reaching $100,000 in annual dividend income by the time I retire. Now, I fully understand this is a process and something that will take time. However, I believe I have time on my side. And when it comes to choosing dividend stocks, I first and foremost focus on quality over anything else. I don't focus on companies that just pay monthly dividends, although that's an added benefit. However, in today's video, we're going to take a look at 3 high-quality companies that pay you a dividend every single month. But before we jump in, do me a huge favor. Click that like button down below. Subscribe to the channel so you're notified anytime we drop new content, and let's jump into the video. Hey everyone, Mark Rusin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. It's fascinating to me this day and age, when you're looking at the job market across numerous different industries, it's really less about how much experience and how smart you are, and more about what education do you have. I hear about it all the time, not only from friends, but from other folks as well, that they apply for a certain job that they have tons of experience for. They're probably over-experienced for, but they lack a certain degree in order to get that job. Don't let the lack of a degree keep you from getting that job of your dreams. This is where today's sponsor, SNHU, comes in, or Southern New Hampshire University. SNHU has one of the largest accredited nonprofit online degree offerings in the country today. If you're interested in the world of finance per se, they have a degree for that and many more offerings as well. And the best part, they're all at an affordable tuition, some of the lowest in the country. And you can check out all of their offerings by going to snhu.edu/Mark. Check out all the offerings, and you can even request information completely free. Definitely check out the link down in the description below. All right, now let's get back to our video, taking a look at 3 high quality dividend stocks that pay monthly dividends. Beginning with dividend stock number 1, which is Realty Income. Stock ticker O. How can we do a monthly dividend paying video and not include the monthly dividend company? After all, Realty Income is the most popular REIT on the market today. Not only popular for their consistent results, but probably more popular, especially in the retail community, for their monthly dividend. Realty Income has paid a growing dividend for nearly 30 years, making them a dividend aristocrat, something that's very rare in the REIT community. Realty Income has not only increased their dividend each year, in fact, they increase their dividend each quarter. As you can see here, the company has increased the dividend for over 100 consecutive quarters and counting, which is quite impressive. Realty Income for years has been backed by a very strong portfolio, a portfolio that is often in high demand, evidenced by a high occupancy rate year in and year out. However, over the past year or so, some of the top tenants for Realty Income have come under question. Here's a closer look at the company's top 20 tenants. As you can see, notable names such as Dollar General, Walgreens, CVS, a lot of these names have been under a microscope here in 2023, and as a result, their stocks have not performed all that well. The concerns around some of these top tenants are fair, although they're nearsighted, because remember, Realty Income is just a landlord. They're not stuck with these tenants forever. This allows management the flexibility that when these leases come up for expiration or renewal, management has that flexibility to go a different direction. Moving on to the dividend, Realty Income currently yields a dividend of 6%, which is unheard of for this company. Although you get paid a monthly dividend, the dividend growth is only 3%. Given that the yield is high, you could probably guess that valuation is quite intriguing as well, as yields have an inverse relationship with stock prices. If you're a patient investor with some time on your side, not only will you get a monthly juicy dividend, but you'll get rewarded for holding the stock as well. Analysts are estimating a FFO of $4.15 per share next year, which equates to an AFFO multiple of just 12.2 times. We're talking about a stock that historically trades closer to 19.3 times. Definitely a great opportunity in shares of Realty Income right now. Now moving on to monthly dividend stock number 2, which is Agree Realty, stock ticker ADC. Agree Realty, I like to say, is the younger sibling to that of Realty Income. These two companies have a lot in common. After all, they both went IPO in 1994. They're both net lease retail REITs. They both pay monthly dividends. However, Agree Realty is much smaller than Realty Income, both in size and value, as the REIT currently has a market cap of $5 billion, which can add to the risk levels, but also add upside potential. Agree Realty shareholders have enjoyed a compounded average annual total return of 11.3% since going IPO in 1994. In terms of the portfolio, Agree Realty has roughly 2,000 properties, with nearly 70% being leased out to investment-grade tenants. Here's a closer look at those top tenants. You can see a lot of similarities, with actually 7 of the top 20 tenants, including 4 of the top 5, Walmart, Dollar General, Tractor Supply, and Dollar Tree, being crossover between Agree Realty and Realty Income's top tenants. The primary difference between the two, though, comes down to exposure. Realty Income has many more properties, so they can spread out their tenant exposure a lot better than Agree Realty. In terms of the dividend, ADC currently yields a dividend of 5.3%, and as you can see from this chart, they have made a concerted effort to grow the dividend at a solid clip. Like Realty Income, the dividend is paid on a monthly basis. Over the past 5 years, the dividend has grown at an average annual clip of 6.8%. Turning to valuation, you will find that Agree Realty actually trades at a higher AFFO multiple than Realty Income. The reason being is that the growth offered by Agree Realty is a little bit higher from an AFFO standpoint. ADC has generated high single-digit growth compared to Realty Income having low single-digit growth over the past 5 years. Analysts are calling for 2024 AFFO of $4.09 per share, which equates to a forward AFFO multiple of 13.4 times. Over the past 5 years, shares have traded at an average multiple of 20 times. Now moving on to monthly dividend stock number 3, which is Stag Industrial, stock ticker STAG. As you could probably guess, Stag Industrial is an industrial REIT, and it's a way to play the growth in e-commerce. Stag Industrial Management recently gave investors a fall business update in which they gave us some insight into leases that were coming up on expiration and renewal. Management stated that 93% of those leases have been addressed and that it has led to a cash rent change of 30.8%, meaning management was able to negotiate higher fees for those leases. In addition, management has also reaffirmed the same-store cash NOI goal of between 5% and 5.25%. Stag Industrial is the second largest industrial REIT behind the likes of Prologis, having a market cap of $6 billion. And as you can see from the chart, the REIT is actually green over the past year. When it comes to Stag, e-commerce growth is a tailwind for the business. As you can see, in the U.S., e-commerce sales still only account for less than 15% of total retail sales. E-commerce penetration is expected to nearly double to 27% by the year 2026, which would be a huge growth driver for the likes of Stag. Similar to the other REITs we have looked at today, Stag also pays a safe, reliable monthly dividend. The dividend currently yields 4.3% and has been growing for 10 consecutive years. Given that REITs have largely been under pressure for the past 12 to 18 months, it's always great to see a REIT that's actually in the green over that time period, and Stag Industrial is one of those REITs. However, even with the move that the stock has made, the REIT still trades at a discount to its historical average. In terms of analyst expectations, analysts are looking for the REIT to generate AFFO of $2.06 per share next year, which equates to an AFFO multiple of 16.7 times. This comes in below their historical 5-year average of 18 times. So there we just looked at 3 high-quality monthly dividend-paying companies. They all pay monthly dividends. They all pay safe, reliable monthly dividends, and they all appear to be trading at a discount. Down in the comments section below, let me know what you think of all 3 of these REITs. Do you own any of these 3 REITs? Do you see yourself owning any of these 3 REITs in the foreseeable future? Thanks again for watching. Thanks again for the support. Definitely, if you haven't done so yet, smash that like button below. I truly appreciate it as it really helps the growth of this channel, and we'll see you in the next video. Take care.